Hey everybody, I got something to show you that you're gonna want to see this if you own your house or you just bought a home. You're gonna want to see this about property taxes. Yeah, you've pretty much been lied to. So check it out and let me know what you think. Here we go.
I haven't made a video in 6 days because I've been sitting here in solitude to remind myself that once upon a time we were sold the idea that the American dream is home ownership, and we forgot what the original American dream is: life, liberty, and the pursuit of happiness. The day that we become a homeowner is the day that we become a prisoner of debt for the rest of our lives. And it's not just the dream of home ownership that's being leveraged, capitalized, and mutated. The dream of being a successful business owner is also dead. Now, you're going to see data today, you guys, that shows for retail businesses, they pay almost as much, think about this, almost as much in property taxes as they do in wages. What happened to the U.S. Constitution? I guess the easy answer is it interfered with corporate and government profit and power, and in the process of these corporations and government entities violating the U.S. Constitution, they have killed home ownership and small businesses. So, in today's video, we're going to start by going into the stats that show what's happening right now in the economy. Our second segment, I'm going to show you guys my accumulation of manipulated and revised data. Our third segment is going to be data on how property taxes are destroying both small businesses and homeowners. And our fourth segment is going to be solely on the solution and what each and every one of us as normal, everyday Americans can do to get our country back into the hands of its people. And welcome back to Real Estate Mindset. You guys already know that this video is going to be absolutely bonkers. Mitch Vexler, sir, it's nice to see you again. I feel like it's been about a week. How are you, sir?
Fine. It's an interesting day. There's a little teeny weeny stock called NTKR that's up 177%. Dow is up roughly 2%. So given everything that's going on, if you define that as the economy, stocks are okay. Gold is down roughly 2%. Other than that, I did want to make a comment on what Travis just said. Interestingly enough, if you look at the property tax versus wages, that's quite an issue, because if property taxes continue to go up faster than the wages, well, if A equals B and B equals C, then A must equal C. That means that the wages themselves, the reason why they're not going up faster than inflation, is in fact the property taxes.
Yes, sir, and that's exactly what we plan on showing people today, as well as reminding you what the true American dream really is. But let's start, Mitch, by showing the viewers what's actually happening right now in the economy, because what I really believe is happening is people know and they feel and they see it at the grocery store. They know something is wrong, but when it comes to the actual data, it doesn't show it. I'm going to start with the housing market. This article came out on the 22nd of June, titled "The 10 Biggest Cities with Price Declines from Peak Through May." And I wanted to remind you guys that the prices of houses right now overall are not sustainable because of our income. And we actually have data now where it's showing that some metros, major, big metros, are crashing in prices. And I've defined a crash as a 15% decline, and I've redefined that as 20%. And look at this list right here, you guys. Number one, Austin down 22% from peak to right now. Oakland down 20%. How would you like to be one of those homeowners that's been bamboozled? New Orleans is actually number 3 at a whopping 18.1% down. San Francisco number 4. Did you know that? Down 15%. Washington, D.C. down only 10.8%. I say only because there have been mass layoffs. Number 6, Denver down 9%. Portland down 8.9%. Phoenix down 8.8%. Fort Worth, Texas down 7.7%. And San Antonio, Texas, down 7.6%. Prices of houses when compared to income is so bubbly, it's never been this bubbly before. In fact, I want to remind you guys that we've had 6 times in history, 5 times in history, where prices of homes collapsed and crashed completely. The other sixth being 1990s. I don't consider that a crash because nominal nationwide prices did not go down double digits. In addition to the housing market being grossly overvalued, so is the stock market. The stock market is grossly overvalued as well. Now, this is the Buffett indicator. You guys may know who Warren Buffett is. He's the genius investor. But I wanted to show you guys this graph here. This graph goes back to the 1950s, okay? This is showing you guys that the speculation in the stock market is not healthy. It's showing you guys that the stock market has never been in a position to collapse as fast as it has right now. Look at the bubble, you guys. 200% ratio of market value to GDP. This is 57% higher than the long-term trends. Do you guys think that the stock market is overvalued right now? Now, none of that would really be a problem if this skyrocketed up with home prices and the stock market, which is a real median income in the United States. But unfortunately, during this massive run-up in asset prices, income adjusted for inflation, as you guys can see here, went down, and therefore mathematically you cannot sustain this new world of overwhelming fraud and debt. Let's not forget the federal deficit. Right now, federal deficit is 37 trillion, plus right here that I'm circling right above my head. People never take this into consideration. We also have 104 trillion in unfunded liabilities. When we divide the total number I'm circling right here, the U.S. income taxpayers, which is 112 million, okay? Each of us taxpayers, one taxpayer, just one, is in a total of $2.4 million in just federal debt. And when we ask ourselves, is the government going to pay that debt off and help us all out? The answer is no. They never talk about paying the debt off, and we see that in how they're spending. You guys, this is the deficit. This is what's being added yearly to the 37 trillion, and it's not even the end of the year. We're over $1.3 trillion right now in deficit. Mitch, can you articulate and can you explain, is it possible for a strong economy, which we hear that narrative on mainstream media and on YouTube all the time, is it possible for a strong economy or even for a business to be strong with this level of debt, unfunded liabilities, and deficit spending? Is that even possible?
Depends what one defines as an economy. If you look at the stock market, you would think, okay, these charts are straight up, everything is healthy, no problem. But the painting is completely unfounded in that, as you pointed out from the Buffett indicator, the debt to GDP on the federal side also translates to the private, or in this case public, business side, Wall Street. So when your debt loads are so great, you end up with all these derivatives under the hood. If you take the derivatives into account as to what's happening in the stock market, I would suspect that the stock market would actually be inverted. So it's being completely ignored. That's Wall Street. On the Main Street side, you've got the real estate taxes, and it's important to note that what we're doing in the First Amendment to the criminal complaint is on behalf of not just Texas, but on behalf of the entirety of the United States. And I made that point in that document 5 times to the DOJ. So the debt loads are so great at the local real estate tax level across the United States, not just Texas, to the tune of 5.1 trillion. Mom and pop do not have that money to pay that off. It will never be paid off. It will require bankruptcy of those schools. That's the math. The math is irrefutable. Somebody can say, well, we think. Nobody cares what you think. The question is, what can you prove? The home median household income does not exist to pay that off. That's the Main Street component of this. The money doesn't exist, mom and pop don't have it, and yet, magically, the real estate taxes keep going up, even though the sales prices are coming down. Therefore, the value as assessed by the central appraisal districts is irrefutable fraud. Now, therefore, you take it one step further. Can this be paid off And what is the impact? And is the economy healthy? No at the Wall Street level, no at the Main Street level, mom and pop. What is not being discussed are the levels of debt at both, and the levels of debt are so great. As I said, before President Trump was even elected, he will be able to blunt the blow, but he will not be able to stop it. It's coming, it's getting bigger, and unfortunately, until they decide to deal with it, and until the truth is known and allowed to come through in a courtroom, which, by the way, all of our evidence is deemed admitted. The truth is the evidence. It's on our website. It's there for the world to see. We just need a real judge who's willing to sit down and hear the case. And until this comes out across the United States and or the Department of Justice and or the FBI, and the SEC's working on it, until they do what their job is, which is to prohibit these crimes from being committed, this thing will continue to blow up and get bigger and bigger, because that's the rule of 72. So the world, the United States, is fighting the rule of 72 that they don't even know anything about. They're fighting crimes that they can't define, even though it's right in front of them. What we did a few days ago on that video with standard deviation, probability density function, that is the proof of the fraud. The standard deviation is required under uniform standards of professional appraisal practice. Ignoring it is creating the fraud. It is creating the bubble from which the school districts continue to raise hundreds of billions across the United States, which can never be paid off because there's no assets under the hood to justify it. It's about the debt.
Segment 2, why can we feel the distress but not see the distress in the data? And that reason is narrative. Let me show you guys what I've accumulated over the last year. On December of 2024, I want to remind you guys that the White House put out a statement saying that they were making revisions to the economy and that the economy was actually growing faster than what they were reporting. And I want to bring your attention to the top slide here that says personal savings rate. You guys see I've highlighted July of 2024 where it's showing the personal savings rate, which is appropriate at 2.9%. But they made the revision and they increased the personal savings rate by almost double to 4.9%. Now this data is actually current. The top chart shows you guys median household income in the United States in 2023. Okay, this is Fred economic data. In 2023, they're saying that the median household income not adjusted for inflation was $80,610. But on the chart below, this is for real median household income, which is adjusted for inflation. They're saying in 2023 that real median household income adjusted for inflation is the same as nominal income, sitting at $80,610. If they're basing their decisions on the data that you guys are reviewing, no wonder why they keep getting it wrong. March of 2024, this is what they did to the median sales price of new homes. Okay, we're not talking existing. This is for new homes. Now, the above chart shows you the true trajectory of median sales price for new homes. You guys can clearly see around the end of 2022, the median sales price for new homes was about $500,000, and that sucker has been plummeting. You can see the trajectory right there. There's the peak, there's the collapse. However, they changed median, snapped their fingers and said, you know what? We don't like how that looks. And they changed it and removed, with a snap of the fingers, $40,000. Look at the below chart, you guys. They're literally showing zero price decline now. So they manipulated this overnight. Now the peak, instead of 500,000, is 460. They removed two tiers. And they did that overnight. Number 4, tax assessment values are way over market values because they need the money to pay off the debt. What you're looking at on the left chart here, the left picture, is an active listing. So you see an active listing. This home is attempting to be sold for $620,000. There's been price cuts. It's been listed for 79 days. But at the same time that they cannot sell this property, they are being assessed as if the market value of this house from the Central Appraisal District, which is owned by the ISDs, the Independent School District, is $813,000. That is almost $200,000 higher that they're being taxed on a property that can't even sell for 620. Number 5, ISD bond elections are hiding the fact that they never intend, just like the federal government, to pay off the debt, which again is why skyrocketing property taxes and overwhelming unaffordability. Now the chart on your left, okay, this is for the same school district. You guys are looking at a school district bond election projection. The one on the left is from 2006. The reason why the one on the left is important is because they're saying that as of 2023, right here, that the bond debt in 2023, this is according to this school district, is only supposed to be about $1 billion. You guys see that right where my mouse is? 2023 is supposed to be $1 billion. But when we go to the same school district, okay, which is on your right, instead of them meeting this projection and paying the bond debt down and interest as they are required to by law, all right? In 2023, the bond debt, counting the interest, is $3 billion. The projections that they are making are lies. Number 6, narrative. And obviously I'm going to use Redfin because they are narrative happy. I want to show you guys this. The name of this article is, okay, and again, look at the date, guys, so you know I'm not hiding anything. June 20th, 2025. U.S. home prices hit all-time high. Again, June 20th, 2025. And I'm going to scroll down to the bottom so you guys see how they're doing this. They're using the 4 weeks ending June 15th, 2025. They came up with an all-time high of 396,500, but the problem here is obviously they don't care, but they forgot that there was a higher median sales price. When we go to their housing market report that came out June 8th, you guys see that the median sales price was higher than it is right now at 397,000. So how could we have hit an all-time record high unless they were just lying to you to create a narrative? Number 7, the last time we went into recession, the Great Recession, the global recession, right? The global financial crisis, there were gross, like disgusting, despicable revisions to the data. I want to remind you guys of that. GDP revisions were large in the Great Recession. During the Great Recession, the advanced releases of GDP sometimes bore little relationship to the numbers that now appear in the official record. So I want you guys to understand they will be revising data once we've all figured out we're in recession already. They're not going to do it before we figure it out. Mitch, I don't want to be accused of some conspiracy theorist, although it seems like all of the conspiracy theories that people had over the last 20 years all have come true. And now we have a second round of conspiracy theories that are way worse than the original round. But regardless, what do you think, Mitch? Do you think and do you believe that mainstream media, mainstream data providers are covering up the bad data trends to push the strong economic narrative? Like, oh, the economy is so strong, nothing to worry about here? Do you believe they're doing that with intention?
Well, if a reporter puts their hand in a drawer and pulls out a piece of paper, and on that piece of paper it says, these are your talking points, well, clearly that is by intent. Over and above that, 4 things that I came up with as you were talking. Inconsistent and wrong data inputs, both at Fred and at the central appraisal districts. They're a mirror of each other. The compound cumulative national, U.S. national debt and the local school district fraudulent bond debt, both of which equal the equity stripping of mom and pop. And the central appraisal districts need that money. So Travis said they need the money to pay off the debt. Not exactly. The central appraisal districts need the money to pay off the interest on the debt. The debt is being rolled out and the interest being rolled up. That is the definition of a Ponzi scheme. And that is what we're living in. The other issue that I came up with was that all real estate is local. So looking at the U.S. averages across the United States just paints the narrative and not the truth. That is the definition of the flaw of averages. So even if you said the reporters are smart enough to figure this out, it would still mean they're doing so lying to the public, and that is by intent. If you said, okay, they're not smart enough to figure this out, well, that's their job. And either way, you're not doing your job and or you're lying to the public. And the narrative cannot be true by virtue of the fact that the debt continues to run up. If you said, well, mom and pop today can write a check for $5.1 trillion to pay off the fraudulent school district bond debt, that statement wouldn't be true. The median household income can't pay it off. And then when you realize that 30 years from now, if you want to be specific, $343,000 is what the current outstanding fraudulent school district bond debt is in Argyle, Texas. In 30 years from now, based on the Ponzi scheme, because they're going to keep adding more bond money to it, but take that off the table. Just look at what you're dealing with today. The compound cumulative effect of the interest on that debt in 30 years from now is just short of $1 million. So it's $343,000. What's your poison? Write a check today for $343,000 to get away from this nonsense, or write a check over 30 years, lose every stick of equity you've got in your house, end up with no value in the house, no balance sheet to the house, and pretty much no retirement fund. Deal with it today and make this problem go away, or your future and that of your grandchildren is at major risk. There will have to be some type of reset. This was going to have to be dealt with.
We don't even have enough money just for the interest to service the debt principal because of the way amortizations work. Now, let's go to our third segment. And we're going to basically talk about now when the government and corporations, when they violate the U.S. Constitution, they destroy us in the process. They have destroyed home ownership, because if we stop paying, and you see this in senior citizens that have their home completely paid off, they stop paying their property taxes for one reason or another, and then armed guards come into their residence, doesn't matter if they're on oxygen, and they kick these people out on the street. And not only that, small businesses. So small businesses, you guys, are also dead because they can't afford to advance the careers of their employees. Let me show you. When we ask the question for retail businesses, which is a higher expense, property taxes or wages? Obviously, it should be wages by a lot, right? Wrong. As you guys can see here, okay, this is the expense category. This is for property taxes, occupancy costs, retail cost structure percentage. 15% goes to property taxes. And if you go to the right here for wages like labor, payroll, things like that, 18% for conventional retail. So property taxes, 15%. Wages 18%, which means if they didn't have property taxes, some of these people could make double, or they can hire close, not completely, close to double the amount of employees. And so when I say this violates the Constitution, the 16th Amendment says they cannot tax us on our properties. They can tax us on our income. It says it, U.S. Constitution, you can tax our income, but you cannot tax our property. And when they violate the Constitution and we, the people, do nothing about it, that's what you see there. I also got some information. This is back in from 2022, so forgive me. I couldn't get the more recent data, but I wanted to show you guys that property taxes on business property only, okay? So this is only for businesses, not even homeowners, accounts for $373 billion. And I also wanted to show you that property taxes are more than the combined total of their sales tax for the items they're selling and corporate income tax. So again, the combined total of those two is less than the property taxes businesses are paying. Did you guys know that small businesses right now are being gutted? Did you know that? But that's not all, you guys, because senior citizens right now are getting massacred with property tax foreclosures, even though, okay, they have enough equity. They could sell their house and cash in $100,000 depending on the fees of the taxes. Let me read this for you. Homeowners, particularly seniors, can quickly accumulate debt under the current tax lien system, as the balances grow rapidly with fees and interest once a tax buyer purchases a lien. You guys may have seen these bum grifters selling these tax lien classes. I'm gonna tell you guys right now, those are false prophets. They are buying liens from senior citizens. They celebrate when they kick a senior citizen out on the street and they buy their house for $1,000. They celebrate that. That's going on right now. If that makes you upset, then do something about it. Tax buyers are particularly interested in the tax bills of senior citizen homeowners, acquiring nearly 96% of such liens during the last decade compared to an average of 25% liens overall. So they're targeting senior citizens because of a loophole, because of a violation, of the U.S. Constitution. It should be against the law. You should go to jail if you kick out someone out of their house because of property taxes. Here's another article. Study finds Honolulu property taxes excessive for tens of thousands of property owners. And this is June 7th of 2025. A recent independent study has revealed that over 60,000 Honolulu property owners are paying more than 10% above market value in property taxes due to an inaccurate city assessment. At least Hawaii and the people are starting to get it. We're screaming to death here at the mainland. We're trying to get people to understand they're doing the same thing here. But again, what happens, guys? Anyone that mentions that we need to end property taxes is villainized. They say, and they use our children and our teachers as propaganda to turn us into a villain, when all we're saying is we need to stop it because there's too much fraud between us, the taxpayers, which again is illegally being collected from us, to the children and teachers. There's too much fraud in the middle. If there wasn't too much fraud in the middle, we wouldn't have the problem we are now. And just in case you think I'm evil and I don't care about teachers and I don't care about children and their education, 25% of my income goes to my kids' education. My kids' education is one of the most important things in my life. And if you still think I'm a villain, let's listen to what property taxes has done to this senior citizen. And I received this email about a week ago. I received a complaint against me by the county for not being able to pay my property taxes. Last year, 2024, I was hospitalized twice with a collapsed lung and was in bad shape. 2 years earlier in 2022, I was rushed to the hospital in critical condition with pneumonia, which caused extensive lung damage. This guy's talking about his own house. I had been driven into bankruptcy in 2021 to stop a tax sale of my family home of more than 50 years. You guys think that's fair to this man? That bankruptcy had to go to appeal, and there was no further violence from the tax thieves. However, in 2024, soon after being released from the hospital, disabled, and having home health aides attend to me, a tax sale notice was put on my lawn. A letter was sent to the county officials informing them of my age and health status and asking them to back off, and they refused. A long story short, you guys can come to my community tab, you can read the whole story, but long story short, because of the violations of the 16th Amendment to the U.S. Constitution, this senior citizen that has lived in that home for 50 years, is paid off free and clear, he can't even get sick. Property taxes are so high, he gets sick and sent to the hospital, he's now bankrupt. Mitch, can you explain to the viewers, because we really need them to understand the debt, right? If we're going to be villainized, then we need to be able to rebuttal that. I'm not a villain. You're a villain for not paying attention to the debt. Let me explain it to you. But can you articulate, are higher or just property taxes in general the direct result of fraudulent, overwhelming debt?
Industrial buildings pay more in real estate tax typically than what they pay all the employees combined inside of that industrial building. So why would those taxes be necessary? Why are the wages not going up at least even with inflation, but for the fact that the real estate taxes are being used as a money grab? Then when you and I received that article from that gentleman, I want to ask everybody, what makes you think you are any different in your circumstances? You may be healthy today, but what if in 5 years or 10 years from now, you become that gentleman? You have health issues, and all of a sudden those taxes can't be paid, and you are getting tax liens. Then I want to take it up one more notch. Our numbers show that between now and the end of the year, there will be over 50,000 tax liens placed across the United States. Now, you would say, okay, that's a relatively small amount. My point is 4.2 million households across the United States are in harm's way of bankruptcy, and we're losing the roof over their head. 42 million. In Texas, it's about 4.2 million. So the point of the matter is, all these households today are in harm's way of losing the roof over their head and are going bankrupt. And many of them are in harm's way due to health issues of not being able to pay any component part for which Under the current law, there is no relief. They'll tell you there is, but you can't get it. So they're stealing from seniors. They're stealing from mom and pop who just simply don't have the resources, the money to pay the real estate taxes. And that total is about 37% of the household population. Which part of this, that the debt is not sustainable, do these morons not get? And it really does come down to people having to get involved by doing exactly what we're doing, which is criminal prosecutions and lawsuits, the whole 9 yards. You got to do what you got to do in order to survive. But that's where we are. You cannot say, well, the property taxes are coming down. I'm sorry, property values are coming down and property taxes are going up. These things can't exist on the same playing field. That proves the fraud. The article from that person in Hawaii is from a friend, and it's extremely dead on point. So you look at that article, and then you look at the article from that person who's suffering health issues. These are severe health issues. And we wish that person the best, but those who are aiming to steal from him, that person needs a litigator, and he needs another bankruptcy attorney. And there was a response from me to that person lining up what needs to be done and at great speed. Most litigators don't like to handle these type of cases, but anybody that touched that gentleman's file, A, you've got a civil lawsuit, you violated federal law, you violated state's law, and B, you're a disgusting human being, and whatever happens to you in life, you deserve.
Brutal, but appropriate considering they're robbing the homes of senior citizens. So pretty appropriate. That's what the data is showing anyway. They don't even, I wonder if they look at age when they're buying those tax liens, because they don't even want any young families. They want the people that are on their deathbed because it's easy pluckings. And I listened to a video, and today is what, Tuesday the 24th. I listened to a video today, someone selling these tax liens, and how they were celebrating, like, yeah, man, I got this house for $700. And the whole time I'm thinking, what happened to the senior citizen that's living there? Where are they, and why didn't you tell them to just sell their house? Just sell your house if they even can get any equity, and just sell their house and use that money to take care of yourself. It's absolutely disgusting. But I want to talk about the solution.
There was another point that I wanted to make, which is a follow-up to what Travis was just talking. One must realize that the value of the fines and the tax liens were in excess of the house. So when you look at $105,000, they're aiming for $105,000 in defaults and penalties and tax liens and attorney's fees. And it's more than the value of the house that the guy bought 50 years ago.
Yep.
So this is unconscionable. This is criminal, straight up.
Well, the Supreme Court has already ruled it's unconstitutional. There's already a case, I think it was in 2022, somewhere along there, where the Supreme Court had a case because the taxes and the penalties and fees exceeded the value and the equity of the house. And the Supreme Court is like, that's not constitutional. You can't kick someone out and have the tax liability more than the actual value. How does that make sense? I want to remind us what the true American dream actually is, and I want to remind you of the warnings that our forefathers gave us. We the people secure the blessings of liberty to ourselves and our prosperity. Do ordain and establish this Constitution for the United States of America. This was back in the 1800s. This guy's a genius, by Thomas Jefferson. Loading up the nation with debt and leaving it for the following generations to pay is morally irresponsible, and exactly what they're doing now. Excessive debt is a means by which governments oppress the people and waste their substance. No nation has the right to contract debt for periods longer than the majority contracting it can expect to live. And then the second quote, I sincerely believe that the principle of spending money to be paid by posterity under the name of funding is but swindling futurity on a large scale. Thomas Jefferson to John Taylor in 1816. The number one solution to this problem is learning what the problem actually is. There's been a lot of momentum about property taxes. We're going to interview some people that are leading the charge to end property taxes, but a lot of those people are kind of getting it wrong because they don't understand the debt. They don't understand how that functions. So again, the number one step to a solution is education and educating yourself on what's happening. Now, one of the easiest ways to do that is go to the First Amendment to the criminal complaint. This is about, I don't know, 2 years of research built into 5 pages. In other words, if you guys really want to learn what's going on, you don't have to waste your time. You can come here. This will be linked in the description. You can go to Mitch's website or you can go to my website and you can download this. And really, it's this chart right here. For example, in Aldine ISD, each household is responsible for $372,000 of ISD bond debt. So the number one thing is you have to understand the actual debt. The second step to that is, okay, after the education of yourself, understanding the debt, number 2 is speaking. You guys have to speak. You cannot be trapped in your comfort bubble. You cannot be trapped in a narrative that you're sold. You have to stand up, you have to speak, and you have to share the message with every single person that you meet. And you cannot share that message unless you really understand what the problem is. It starts at the ISD, the Independent School District. And you got, again, I love teachers. I love children. I'm not a villain. I just looked under the hood and I realized what the real problem here is. And the real problem is they use those things as propaganda to make me a villain. Number 3, okay? Number 3, step 3 to the solution. We must hold the officials and the politicians accountable. We have created, painstakingly, I may add Mitch, through Mitch, Jeff, mostly Mitch, mostly Jeff, a little bit me, we've created a criminal complaint template. It works in every single state. You just have to figure out what the bond cap is for the ISD in that state. You put your name, you put your address, you figure out the parties, which is basically the school board, and you send it into the FBI, the DOJ, your local DA, and we start holding these people accountable. We have put forth all of the steps necessary for you guys to help with the solution. Now, if you can't do any of that, remember, Mitch has the petition. If you only want to spend a few seconds, the petition is in this link, but what we really need you guys to do is learn, speak, and hold them accountable.
Well, there you go. Now, if that seems kind of hard to understand, watch it again, because then you start comprehending of what they're actually saying to you about what they're doing to you if you own a house or you're buying a house, and about property taxes. Yeah, I would watch it at least twice, if not more, and understand what they're doing. Now, there's another video he has out, and this one is with his house. He is going to the, I guess the auditors or property tax, whatever they do with it in the county. He's having a meeting with them, and he's actually breaking down and showing them that they're breaking the law, and it pissed them off. So I'll put that up pretty soon, and if not, you can go to his site and check it out for yourself. Hey, you have a great day. Subscribe, push the like button, and leave a comment. Love you guys. See you.